Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap session for Monday, August the 7th, 2017. My name is Doug McKay. I'm the founder of Quantum Leap Futures. Each morning, we get together in these live go-to sessions to take a look at the market, macro to micro, take a look at the structure of the market, and then we drill down to our trade levels, our targets, and our hypothesis for the day. We do have multiple hypotheses in order to have a plan in place. We do not know what the market's going to do. Therefore, we can only structure a plan and then determine what the market is doing and then use the plan that best suits the market to execute. This is a subscription room. If you're interested in checking out, send me an email at quantumleapfutures@gmail.com. There's no website, there's no blog. This is not a commercial venture. We do everything live here in the go-to and live trading during the course of the trading day. Excuse me for 1 second. Please read through the disclaimer. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence, your own trade plan, and your own risk metrics. Okay, so taking a look at the news today. Pretty light news. It's a holiday here in Canada, so all the banks are closed. Everything's closed. 10 o'clock, we have labor market conditions coming out of the U.S. 1:25 Eastern, we have FOMC, Kashkari speaking, and then 3 o'clock, we've got consumer credit. It's really a light news week. We've got JOLTS tomorrow, housing starts in Canada, NFIB small business. That would be about it for tomorrow. And then Wednesday, we've got prelim non-farm and unit labor costs. And the big one on that day will be crude. And then Thursday, we get the PPI and unemployment claims. And then Friday will be CPI. So really a light week in terms of news leading up until Thursday, and then Thursday and Friday should be bigger. We are still in the earnings season, I should say, and not a lot of releases today. But again, all the earnings are pretty much good. There are some misses, but they're few. Not a lot. The big one this week will be Disney, I think. But we are winding down. Most of the big ones have already released. If we take a look at Friday's trading, we are looking for an open auction out of range. We're looking for a rotation down towards the value area. We were looking for that trip through value. We did go down and hit the value area low and take out that naked VPOC. Then the buyers came in, and then we basically just went sideways, chopping between that 74, 75 area and the 72, 71 area, and basically just fought the range high from Thursday. Very tight trading range. Something to note, last week was the smallest range. We only had a 14.5 point range. It was the smallest range, weekly range, in 136 weeks. It goes all the way back to November the 24th week of 2014. So very, very tight trading week. We are compressing. You can see the compression right here. We're trading in on the daily a symmetrical triangle. We'll take a look at that in a minute. Well, let's take a look at it now. So each day I like to start my day with a simple candlestick chart. I use my paper money, and I use a 9 EMA, 20 SMA, and I'm looking at where we are within the trend. Do we have good slope and separation? Are we challenging the trend? You can see our all-time high is at 2480. We're trading, basically 5 points below that, 6 points below that. Trend is very strong, and we're close to being violated on the monthly. On the weekly, you can see we did get an inside week last week, so we traded inside of the prior week, and that could lead to a move down to test the 9 EMA, but it's not a foobar, Mr. Sneaky. So I think we still got some breakout potential to the upside. The fact that we're holding so tight, and we seem to be closing pretty much for the most part. We did close below the 2470 on Friday, but we only closed 3 ticks below it. But very, very tight. We can see 14 and a half points, and that goes all the way back to 2014. I'm not going to go all the way back, but I counted them, and it's 136 weeks since we've had that small of a range. And that week of the November the 24th, 2014, it was a 4.5 point week as well. Now it broke to the downside, but not by much. Going to the daily, this is where I was talking about the fact that we've got the symmetrical triangle. So if you want to watch on your daily, I would draw your triangle. And watch for the breakout. And obviously, I'd be looking for a breakout above the 24, 77, 78 area, that naked VPOC that got missed by 1 tick again on Friday, or a break below the 24, 68, 69 area to the downside. Again, on the daily, we held the 9 EMA. We continue to do that. We are losing some slope and separation. So, we're coming to a breakout point. I think this week is going to be a large breakout week, personally. If we go down to the intraday, you can see that we're getting this consolidation on the 4-hour. We're challenging the trend right now on the 9 EMA. But for the most part, we are holding up here and compressing. Going to the 1 hour, we have broken below the 9 and the 20, but they're coming back up to test it. We just rejected it in the last hour, but we do see a possible start of a downward trend on the 1 hour. On the 30-minute, we've got a naked cross right here at 76, and we are in a downward channel, downward trend on the 30-minute, and we've got slope and separation to the downside. On the 15-minute, you can see they tried to take it back and get above the 20, and they just failed. Now they're coming back and trying to get above the 9 right now. But for the most part, we're in a downward trend on the 15-minute. And then on the 5-minute, we've been trending down, and now we've gone into they challenged and violated the trend. Now we're trying to hold above the 9, and we're in this consolidation zone here. So not a lot of information in terms of where we are. I mean, the overall trend is still up. You can see the buying tails that we've got. Every time the market goes down, the buyers are stepping in, okay, and we continue to have higher lows on the weekly and continue this one-time framing up that we're seeing on the weekly. We've got a fairly decent distribution zone, double distribution on the microcomposite with the LVN separating the two distributions at 71. And you can see that in the last 5 days, we've accepted value higher at the 72, 75. Our overall VPOC, which is 4, 8, 12, 13 days old now. Our microcomposite VPOC is 69, and then we tried to hold value up here at 76 and a quarter. And Friday they looked like they were going to go above it and break to the upside, but the sellers came in and then we closed down at the 60. I'm sorry. Where did we close? We closed at 72.50. So we did. I'm sorry. I our low was the 69. So we did close again. We have closed it in the 70s. Okay, for basically for the whole week last week. So taking a look at the overnight, our week open, our week open is 24.72 and a quarter. We basically have held that. We came down and tested it overnight. Again, we went up to the 77.50, missed the range high from Friday by 2 ticks, and then we had a lower fractal high at 77 and a quarter, and then it started selling off when Europe opened, and they came down to 73, held the open and bounced, and basically we're just chopping around in the 74, 75 area, likely going to get a VPOC shift down. But the overall inventory is net long, so we've got to watch that 72, 71 area. And if we get below that, we could get some longs that are caught, and we could see a liquidation break and a move down towards that 69 again, and possibly even come down and test. What was last week's low? Last week's low. Sorry, just gotta get the right chart here. Our low last week was 63 and a quarter. 63 and a quarter. That's on the full session. So we're going to have to watch for a break below last week's low. So taking a look at our Globex and moving our numbers over, our overnight high was 77.50. Our overnight low is 72. That's right on the value area from Friday, value area low. We've got a double distribution overnight at 75 and a quarter, and that's just above the value area high from Friday and the open. So I'm going to use that 75 and a quarter as my trade area, a little bit above the 74. We've got an LVN right there too at 75.50, so I'm just going to move it up slightly to there, and then I'm going to be targeting that 76.50 above and the overnight high, and of course waiting for that breakout of the range and a takeout of that 78. And basically, if we get outside of Friday's value and above the overnight LVN and the LVN here, I'm targeting that 78, but I want to get in low enough so I can target that 76.50 as my first scale, and a move to take out the overnight high at 77.50. The overnight low at 72, I'm going to be watching just below that. That's that 71. The 71, that is the LVN between the double distribution that we've got on the micro composite. So 71. And I'm going to be looking for a move back to the micro composite, which is at 69, and Friday's low that is at 69 and a quarter. And I want to get in and target it. And then my trade levels below don't change. The 66, our 20-period daily ATR is now under 13 points. So our daily ATR is running at 1238. So off of the high overnight of 77.50 minus the 1238, our downside daily ATR gets moved up to 65 and a quarter. And off of the low overnight of 72, our upside daily ATR is 85 and a quarter. And weekly critical mass we don't need. 80.50 is the all-time high. It's also going to be a trade area for a breakout. Edit. And then we've got measured moves to 82 and a quarter, 84.50, and then our daily ATR. Our weekly, I'm not going to worry about our weekly right now, but our weekly average true range full session is running at 33,325. So basically, here we are in the same scenario. Nothing really has changed. The hypothesis is not going to change by much. We're looking at an open auction, just in range, in value, and we're looking for responsive sellers down to the VPOC and the naked close, coming down and testing the overnight low, and somewhere between 73 and 71, I'm looking for responsive buyers and then rotating up through value and chopping around in the 75, 76 area and coming up and breaking the range high from Friday and taking out this naked VPOC at 78. Chopping between 78 and the 76, and then a push up through to new all-time highs and basically going sideways in the 80s. And then coming back and closing somewhere around the 78 area. But I am looking for a break and a takeout of that 78 on Hypo 1. On Hypo 2, I'm looking at a move up, a failure to take out the 78, or a quick pop and drop, a failure to put in a new all-time high, and then rotate back down, okay, coming down, taking out the naked VPOC and closing the gap and chopping around here, and then giving a late afternoon, late probe in the afternoon back down to 69 and closing somewhere between 69 and the 66 area. That is Hypo 2. Hypo 3 is more balance and basically chopping between the 78 and the 69 and going sideways. And then Hypo 4 is a open auction in range, failure to take out the overnight low, finding initiative buyers right away, coming up, breaking the 78, and then breaking into new all-time highs and coming up and testing up here between the 85 and the 90 and closing at new all-time highs on the close. And that is my Hypo 4. And then alternatively, I'm looking for a break, a failure to break the range high and take out that naked VPOC, and a move down to the 66, chopping around between the 66 and the 61, and then failure, and a move back down into this 57 area, and closing down here between 57 50 and 51.50, and having a break to the downside and showing some weakness for a possible move back down into this prior balance that we broke out of, which centers around this 35, 36 area. So coming back down here to retest this balance area that we were in for such a long time before we broke out into new all-time highs. So that's what I'm looking at for the ES. Taking a quick look at gold. Gold has broken down and coming down to test this 59 area. Watch for them to hold that 59 and come back up and chop between the 69 and the 63. If they do break the 59, I'm looking for a move down to the 1250 area. I'm back into the lower part of this distribution. This should not be there anymore. And move down into this 51.60 and starting to chop in this area between the 59 and the 51. If it really gets nasty and it gets below the 48, I'm looking for a move all the way down to the 45 to 43 area. We made a pretty strong move up. This is a large move off of that low at 1204. Basically almost 80 points up, and we got a shift of the composite VPOC, which goes all the way back to 2008. We're unable to hold above it, so they're in price discovery to find where the real buyers are going to be, and I think it's going to be somewhere in this area in the 1242 to 1252 area. So you probably see a sideways day on gold today. Anyway, that's going to complete our pre-market session. As always, trade well, trade safe, and catch you on the flat. flip side.